3M has always been one of the most popular stocks to own for dividend investors. It's actually a dividend king. And because this stock has been crashing by so much in recent years, that dividend yield has actually reached a record high, which is making the stock even more attractive to own as an investment. It's making it very tempting to buy at these levels. However, 3M has a lot of issues too, especially some very serious lawsuits that could potentially send the company into bankruptcy in the worst case scenario, which is making the stock a lot riskier than it otherwise would be. And being that this is a stock that I actually own myself, I've been getting a ton of comments and questions asking me to do an update video on it. So that's exactly what we're going to do in today's video. We're going to talk all about 3M, the business, the value of it, the dividend, but also the issues, why the stock has been crashing. We'll cover the lawsuits, and I'll give my opinion on all of it. It's going to be a very interesting video. I hope you guys enjoy it, but let's not waste any time because we got quite a few things to talk about here. So let's just dive straight into this. All right, now let's start by taking a look at the stock just so we have a foundation here to work with in terms of how cheap 3M is trading these days and everything that's going on. Now, given that 3M is a very large and well-established conglomerate, seeing such a large crash like this go on for years is pretty rare, because from its highs, 3M stock has now fallen by about 60%, which leaves it not only lower than the 2020 market crash, but it's also about the lowest point that we've ever seen in over the past decade. And with that unprecedented crash also comes a record high dividend that is now yielding a higher amount than any other point over the past 2 decades, which it might even be the largest ever. I mean, I can't really tell because this chart doesn't even go back that far, but that even includes the Great Recession, and it's now sitting at over a 5.5% yield, which is very high. And perhaps just as important as that very large yield is how many years it's been consecutively grown, which currently sits at over 6 decades in a row. That's something that very few companies can even get close to matching. Yet despite that monstrous growth history, the payout ratio is only 60%, which is still very manageable. Assuming that the business remains relatively stable going forward, that dividend should be more than safe at these levels, and it's easily one of the most attractive overall in the entire market. But of course, that's the whole issue with 3M, right? Does the business remain stable over the long term, given all of the different issues that they've been dealing with? Because first of all, when looking at the business, 3M is a company that sells all kinds of popular and regularly used products like Post-it notes, Scotch tape, Command strips, Scotch-Brite, and also just various industrial and workplace related products in areas of automotive, electrical, manufacturing, and even healthcare, just to name a few. Things like face masks, for example, skyrocketed in popularity during the pandemic, which helped boost their financials during a time when most other companies were in heavy decline. However, that very broad exposure to both businesses as well as consumers has left them vulnerable during our current macroeconomy, where we not only had a literal recession earlier this year, but we also have record high inflation with rising interest rates that are making 3M's input costs more expensive while also raising their prices and weakening demand. And as if things weren't bad enough, 3M has also been plagued by supply chain disruptions that continue to linger on today because of China's zero pepperoni policies and lockdowns, where not only tons of 3M's products are produced, but it's also one of their largest markets at about a quarter of their entire business. But with all of those horrible conditions in mind, you would think that 3M would be in severe decline right now, especially given the massive crash in the stock, yet that's not really the case. In fact, sales only fell a couple of times recently in 2019 and 2020 by only around 2%, while actually growing in other years by similar amounts or even more, like last year, for example, where they reached a record high in sales. Not to mention that their cash flow profits are also right near a record high as well, which makes their dividend even safer to rely on long term. Still though, one of the biggest criticisms surrounding 3M for years now has been their lack of growth, but I personally invested in the stock anyway because I felt that investors were completely missing the point about 3M. This is not meant to be a tiny company with explosive growth. This is a giant conglomerate that does over $35 billion of sales per year. and that is using that massive size and reach to remain dominant and return profits to shareholders, especially through dividends. But also, it should normally be considered a stable and reliable stock too if it wasn't for all the controversies that have pulled it down. I mean, this is a company that consistently gets awarded over 3,500 patents per year, that already surpassed well over 120,000 patents in total, and continues to invest about 6% of their sales back into research and development, which equates to over $2 billion per year, and also commands a global footprint that includes R&D labs in over 50 countries, subsidiaries in over 70 countries, and sales in over 200 countries. And when you put that whole picture together, this is supposed to be a reliable giant that really should not be trading this low, because as it stands, their valuation is about 30% cheaper than the sector, while also being over 40% cheaper than their own 5-year average as well on a price to earnings ratio. So when you look at it, the stock at these levels, that dirt cheap valuation for that super attractive dividend, it should be a screaming buy, a no-brainer pickup here if you're a long-term investor looking for a stable, reliable dividend stock for the long term. If it wasn't for the lawsuits, that's the biggest issue here. That's the giant wrench in the whole machine that people can't really seem to agree on. You've got the extreme bulls that will tell you that that wrench is just going to get dislodged on its own. It's not as big of a deal as people are making it out to be. It'll go away. It's an issue that will go away, and the machine will return to normal operations, and 3M will soar once again, and it'll be a great dividend stock to pick up at these levels. It is a great buying opportunity. While the extreme bears will say that that wrench is going to cause irreparable damage to the entire machine. Gears are going to start grinding together until the entire thing collapses and 3M goes into bankruptcy, and this ends up being a horrible investment to have ever taken a chance on. So, what is my opinion on all of that? Well, let me just quickly recap you on where we are right now, and I'll share my thoughts on where I think we're heading going into the future. Okay, now in general, 3M has really been facing lawsuits throughout its entire lifespan, but more recently, it's been escalating with a few different ones involving things like PFAS contamination of groundwater, otherwise known as forever chemicals. There's also been claims of faulty surgical devices, questions about asbestos-containing products like adhesives and caulk, as well as the effectiveness of their masks and respirators. But by far the biggest and most impactful of these lawsuits is looking like it'll be the one brought on by almost 300,000 veterans that claim 3M sold faulty earplugs to the military, which resulted in hearing loss. This massive class action lawsuit could result in 3M being forced to pay tens of billions of dollars if courts rule against them, with recent estimates from a testifying expert even going as high as $100 billion that would very likely send them into bankruptcy. For context, 3M only has about $15 billion of current assets on their balance sheet, and it's about the same amount for net assets when you subtract liabilities. So at the very least, they would need to aggressively cut their dividend and start pouring most of their profits into those payments, which, by the way, the plaintiffs even asked the judge in the case to freeze 3M's dividend payouts because of the lawsuits so far. But as far as I know, that request has not been granted, so it's not a huge deal, but it's just something to be aware of. Either way, though, I mean, we're talking about a stock here with a market cap of only $60 billion. So if they're fined over $100 billion, then yeah, you're almost guaranteed to see 3M go bankrupt. The question is, how likely would that result be? Well, 3M is definitely trying their hardest to get out of these lawsuits. I mean, first they tried to have their subsidiary Aero Technologies file for bankruptcy so that 3M wouldn't be held liable for the earplugs, because Aero was actually acquired by 3M, but 3M has been kind of on the hook for these lawsuits. And Aero Technologies is the company that actually developed the earplugs. But the bankruptcy judge in charge of that case actually declined 3M's protection from it. So 3M is essentially back on the hook for these earplugs. If they're sued for the earplugs, 3M will have to pay. And now since then, 3M has filed for an appeal on that decision, and that actually is making some decent progress because a federal court just recently agreed to hear their case for appeal, but they may just end up rejecting it anyway, just like the other court did. So it's kind of still up in the air. It could go either way. Apart from that, though, 3M has also offered $1 billion to settle the claims out of court, but the plaintiffs have essentially laughed at that because they say that the total bill is going to be massively more than just $1 billion. So they would actually rather go to trial, which, if it all does end up going straight to trial, like, full on to trial, it could be bad for 3M because they've actually lost numerous lawsuits involving the earplugs already when those went to trial before this larger class action lawsuit was brought on. So, they definitely want to avoid trial if they can avoid it. Now, to this day, 3M still claims that the earplugs work when used correctly, but given that they've been losing these lawsuits, I mean, it's not out of the possibility that they may lose yet again, except this time, obviously, it could be for much larger amounts. So, what I think it really all comes down to is how much risk you're willing to take on here with this stock and whether or not you feel like you have to make a move on it right away, right now, decide on this stock. And personally, I don't have that same sense of energy as I'm seeing a lot of other people when they talk about 3M stock. I see a ton of uncertainty here with this whole situation, and I can't tell you one way or another where it's going to go. Part of me feels like it's just going to end up being like every other giant corporation that we've seen in the past, like Johnson and Johnson or some giant pharmaceutical companies, where they get some massive lawsuits and the headlines talk all about these companies going into bankruptcy, only for them to get settled out of court for much smaller amounts than what the headlines say, and the companies return to normal operations, and it ultimately ends up being a relative buying opportunity for the long term. That's kind of what my gut is telling me because that's usually what happens to these giant corporations. 3M employs like 100,000 people. They have operations all over the world. They have so many connections to other businesses. I'm not sure that the courts are going to make such a giant example of one of the biggest world's conglomerates and send them into bankruptcy and completely destroy it. I'm not sure that's going to happen. But at the same time, there's a lot of risk here. And even in the better case scenarios, you could still see 3M having to pay some huge fines and possibly cut the dividend, even if they don't have to file for bankruptcy. Even if in a better case scenario, they might still make some cuts to the dividend. And personally, I can tell you right now, I only own 3M stock for that dividend. I mean, sure, I like 3M for other reasons, and I think the valuation is good for the stock in general, and I think they have some good brands, and I think they are working towards the future, but they're very low growth, if at all, and I'm not really owning this as some high-flying growth stock. I'm owning it as a value dividend stock, and without the dividend, it's just not that attractive to me, and I think there's better options out there in the market. And speaking of that, that brings me to my next point. There are so many great dividend value stocks in the market right now that have been crashing by giant amounts that also have record high dividend yields. I just recently put out a video talking about some of my favorite record high dividend yield stocks that I'm buying right now. And they're different stocks in 3M. So there's plenty of opportunities in the market. There are so many opportunities in the market. So when someone tells me that I have to make a decision on 3M right now, I got to go in and buy the stock. It's a great, once in a lifetime buying opportunity for 3M. That's ridiculous to me. There are so many options in the market. You do not have to make a move on this. You can make a move on anything else. And who cares if the stock soars, if it crashes, it's not a big deal. There's so many opportunities out there. So I don't see it the same way that other people are seeing it. Again, I personally feel that 3M will probably be fine. So when looking at my stock, I'm not planning to sell it. I'm going to end up holding on to my position. It's only around 2% of my portfolio. And if it continues to crash, I might just let it go down to like 1% of my portfolio so that my risk is limited there. But there used to be times where I wanted 3M to be like a much larger portion of my portfolio. I wanted it to be like 7% of my portfolio when I really liked it and I wasn't so concerned about these lawsuits. But now with all of this uncertainty, I've been letting it just get smaller and smaller in my portfolio, and I might just kind of let it dwindle away on its own because I still think that they might be okay long term, so they might still recover. So that's why I'm kind of just holding on to it, but I don't have any kind of urge or urgency to go out there and buy more of this stock. So I'm not buying any more 3M stock. I'm just going to kind of leave it alone right now. So that's my opinion. That's how I feel about it. I don't think you have to make a move on it. I think there's so many options in the market. So it's kind of a hold for me. It's just kind of a hold and wait and see and keep it in a small position. And I definitely wouldn't be making a giant investment here because, again, there's so many safer options out there. Why would you be taking that risk? It's unnecessary, in my opinion. Anyway, those are just my thoughts. I'd love to hear what you guys have to say down below. Please leave your comments down there. And feel free to ask me any questions. I'll respond to your comments. But thank you for stopping by. I'd love to hear your thoughts about 3M and any other stocks you want to share. But hope you're all doing well, and I will catch you in the next video. Take care. Bye-bye.